Well, good morning. How's everybody today? I'd like to thank the Real Estate Research Committee for Spokane-Kootenai County and Dale Strom for inviting us to speak today on the Spokane Commercial Real Estate Market. I've got with me Jeff Johnson, who's our president of our commercial brokerage group and our sales manager and my partner. And boy, we've been in the business a long time, haven't we, Jeff?
A long time.
40 years for me and longer for you.
46 years.
So we've been at this a while, and we both have spoke before at the annual market forum. So it's a great opportunity, and we're very thankful to do it again. Crazy format we have here, a little bit of recording, and we've got a really tight time frame because Jeff and I are going to ham and egg the entire commercial real estate market in 15 minutes here.
Correct.
Jeff's always been an office guy, been a retail guy. He's going to speak on office and industrial, and I'm going to speak on retail and investments. So with that, I'm going to jump right in.
Great.
And go. So retail. First of all, Spokane and the Inland Northwest has benefited from COVID in terms of in-migration. There's no secret there. We don't need to dwell on it. We're experiencing a whole bunch of new people to our area, which is changing all our real estate markets. So with that, retail was in a transition before COVID, and you know all the retailers were going to online clicks and bricks, as they call it, and I think COVID drastically accelerated that. And so it's been an interesting ride. Last April 1st, the Nationals all quit paying rent. It's like they got together, Jeff, and
Yeah.
they said, you know what, we're going to quit paying rent. And COVID had only been going on like for 2 weeks. So, you know, we had all these national tenants that just didn't pay us rent. And I was panicking. I thought, what is going to happen here? Is the multifamily market going to quit paying rent? Are the local tenants going to quit paying rent? But as it turns out, the Nationals, as much as they were adamant about not paying rent for April, May, and June, a lot of them in the middle of that time period came to the table and said, hey, we really don't want to be evicted. We like our locations. Can we make a deal with you to make this up? And so we spent the balance of the year making deals with these national retailers to pay us back.
Right.
So, for example, Aspen Dental, very fair negotiation. They said, hey, we want to not pay for 3 months, April, May, and June. And I said, well, how about if you pay us double for July, August, and September? And so that's what they did. And they made it up. So by October, we were whole from Aspen Dental. Now, the other retailers weren't quite as clear as that, and some of them are still paying us back from last year, but I think we're gonna get the majority, if not all, of the deferred rent that we gave from the Nationals. You know, towards the end of the year, the locals that were struggling, the restaurants, and we're landlord to many restaurants, over 50, they started not paying us rent because of necessity, not because they had a policy. You know, Starbucks probably did well in their drive-thrus, but they had a policy of not paying rent for a while, versus other full-service restaurants that really couldn't survive and quit paying us rent. So that's kind of what COVID did to us, but now I think everybody's fairly current. We've got still some hangover delinquencies, but it's looking really strong. And frankly, 2020 ended up being a good year in the landlord retail business, so to speak. Some of the sub-market statistics real quickly. The South is still plagued by a couple big boxes that are vacant, the Albertsons and Shopko. So the vacancy rate is 13.5%. I think this year in 2021, you'll probably see a deal or two on the Shopko Center. I'm not sure about Albertsons. We're still working on that one, Jeff.
Yep.
But you know, recent rates have gone down a little bit on the South Hill. It's always been a really strong retail market, but The recent rates are down about 6% to $17.50 a foot. New deals up there are Thai Bamboo opened, which is a deal we did. Natural Grocers opened in right before the pandemic, early 2020, and of course the grocery stores were one of the winners of COVID. So with 2 grocery stores in our center up there with Rosars and Natural Grocers, we came out really nice. North side, again, some of the boxes are still vacant. The Babies R Us at Division and Francis, the Hastings at Wellesley, the Shopco up there is still vacant. So that all adds up to about 11.5% vacancy on the north side. But the north side has always been, really an active place. Texas Roadhouse opened, Chick-fil-A opened, and Chick-fil-A, you can't even get in there. I've gone there twice and
The line's too long.
I've not had the patience to actually eat there. So, but pretty cool deal, long-term ground leases. And in fact, the Texas Roadhouse, I'll get into in the investment, sold for, I think, a sub-5 cap rate.
Wow.
Long-term ground lease. So that's North Valley. Valley's got a low vacancy rate, but the rents are low. The rents are only about $13.50 a foot in the Valley. Ashley Furniture did open in the old Shopco though.
Yep.
We were involved in that deal, and also Burlington Coat opened in the Toys R Us out there east of Sullivan. So those boxes filled up, and that really helped the Valley vacancy rate. It's down to less than 4%. Wow. Which is kind of interesting because the rents are fairly low. The west side has been a bright spot. The recent rental rates on the west side, Jeff, are $20 a foot now.
Wow.
Thanks to some new deals out there and the 2 Amazons, one already open and one going to open out on the west side of town. Downtown vacancy, frankly, has remained fairly stable at about 7.5%. The rental rates are around $16. Actually, we've had some new restaurants open during COVID. Wooden City is the prime example in Tavalata in the old City Hall building. Great restaurants, really gutsy moves right in the middle of COVID. So I think that bodes well for downtown, and downtown is a whole discussion amongst itself, which we don't have time to get into, but I think downtown is going to emerge as a great place. A lot of work being done on the homeless and criminality issue as well. So pandemic winners in retail, grocery, home improvement. One of the trends we're seeing is medical filling a lot of these spaces. Chiropractors, massage people, physical therapy.
Yep.
Filling up these shopping centers. Auto industry is cranking. But the losers, of course, have been the entertainment venues, the cinemas, the theaters, the symphony.
Yep.
The full service restaurants have been losers. And so, I think that the athletic clubs. Is the Spokane Club going to be okay? We hope so.
Hope so.
So that's kind of the retail market. I think that in summary, COVID accelerated the clicks, but we're still going to have bricks.
Awesome.
So
Super.
Go ahead, talk about office.
Well, Dave mentioned that we've had strong in-migration and strong population growth. And population growth and job growth drive the office market. When people move here, and our population over the last 12 months of Spokane County grew at a record rate of about 1.7%, equating to about 9,300 people are moving in here. And as people move in, they need a doctor, they need a dentist, they need an insurance agent, they need an accountant. So it's a big driver of our local office market. And then manufacturing jobs tend to create more service jobs. So there's a multiplier effect there as we get these better jobs in our market. So kind of tough news is most of our local office users made it through COVID. They got PPP loans, they adjusted to shifting their staff to remote work. But now what we're starting to see is some fallout, especially with larger national office tenants in our market. So we've got sublease space now coming. A couple examples would be Comcast had 550 jobs and 80,000 feet out at Liberty Lake, and that space is now on the market for sublease. We've got a couple big tenants in Rock Point, Engie, putting 25,000 square feet on the market for sublease. Principal Financial Group putting 30,000 square feet on the market for sublease. And there's rumors that there are a number of other large national tenants that, as these national companies are reassessing what percentage of their workers are in the office, what percentage are working remote, are going to probably continue to downsize. So Spokane historically has had kind of a low velocity office market. Our office market's about 12 million square feet, and 5 years ago our vacancy rate was about 17%, and we chipped away at it so that at the fall of 2020 we were just a little over 10% vacant. Our 10-year absorption average is about 100,000 feet. But as Dave and I would share with you, our office market has never been just a dynamic market, and I recall 30 years ago our absorption rate was about 100,000 square feet. So CoStar reports that over the last 12 months we've had 233,000 square feet of negative absorption.
Interesting.
So we've got some work to do, and hopefully the growth due to in-migration is going to offset some of this sublease space that's starting to hit the market. But we're probably going to see our 10% vacancy rate go up again, and then we'll have to go back to work. Rents are actually up and have held pretty steady, and we've got, on the low end, we've got Class C rents at $12 to $16, and some bigger numbers than Dave and I would think of historically. And in the top of the market, Class A, we're up to $22 to $28 a square foot. And at the very top of the market, and the most active part of our market, which has been medical office buildings, we're seeing some new buildings in the $30 per square foot net range. We did have quite a few office building sales last year. They averaged about $148 a square foot. Cap rates 7 to 7.5%. And the majority of the big sales were, again, medical office building sales that were fully leased. The bottom end of that market, so to speak, is always users, and the users drive our office market building sales. So predictions, I think we got a soft landing here, but we will have some sublease space on the market. Yeah. And big picture, companies, I think office companies have determined that having people back in the office is better for productivity, collaboration, and building culture.
Totally agree.
So I anticipate that people are going to be coming back into our office market.
Yeah, and I think that'll really help downtown.
It'll help downtown.
You bet.
So that's the synopsis of our office market.
You mentioned cap rates, talking about investment real estate. Cap rates are really going down in our market as a general sense, except for maybe the office market.
Yeah.
My dad used to say there's no bad real estate, you just got to live long enough. And it's interesting, we've got people moving here now and institutions looking here and all kinds of entrepreneurial investors looking at our market, and cap rates, I never thought they would be as low in this market. Yes. We've always enjoyed the idea of buying 7, 8, I can remember 10 caps.
Right.
And now with low interest rates, you can get, a 3.5% interest rate, and you used to be able to buy an 8 cap and you'd have 15%, cash on cash returns. So that's kind of ending, although interest rates are still low. Apartments, crazy market.
Crazy market.
Crazy market. Less than 3% vacancy right now. I mean, I think the average at the end of the year was about 4.8, but really it's less than 3, and most projects are full.
And we have a housing shortage.
We have a housing shortage. We're building about 1,000 apartment units a year. We need at least double that.
Right.
And we just can't get sites and permitted fast enough to keep up with the demand. Inventory is way down. Hard to find good investments. We're just out there searching for our investors. We're finding a few.
Right. But we've never had so many out-of-town, out-of-state investors looking for product in the market.
Never been like this.
Yeah.
So It's really an interesting time. COVID has actually made Northwest real estate more attractive. You got California with its politics and its regulation, and that has filtered up I-5 to Portland, Seattle. So people are moving to the inland Northwest. We're close enough to Idaho that we're, you have to fly into Spokane to get to Idaho,
Yes.
typically, at least North Idaho. And so we're getting good activity in Spokane as well as North Idaho. North Idaho obviously is on fire and the #1 real estate market in the country, according to the Wall Street Journal. But multifamily rates, even in COVID, went up 5.2% last year. Average rental rates. So we're getting some serious appreciation, which is lowering cap rates. We just sold an apartment in Brown's Addition, I think, for like a 3.5 cap. My nephew JSB3 sold that to a Seattle broker who bought it.
Wow.
So we're kind of just shaking our head. The Marjorie, which is a conversion of our old James S. Black building, we filled up in 45 days at top rents. And just, so I think the development business right now, other than construction costs, which are off the chart,
And availability of labor.
Making construction costs crazy. And so development is tough right now, but if you can develop something, it's almost better than buying something right now. It's always been the opposite
Yes.
in Spokane. Some apartment stats. In 2019, we sold 135 million of apartments. That was about 110,000 a unit. That was 1,228 units. In 2020, it was down quite a bit to about 80 million of apartments sold, 346 units is all in 2020, at about 114,000 a unit. In 2021, it's going to be interesting to see the numbers because there's no inventory.
Right.
We do have unsolicited offers going on apartments at what I consider to be double the market rates. Just crazy. Of course, I used to think that a 6 cap was too high a price for apartments, and now we're seeing sub 5.
Right.
So again, our market is changing. I think people are afraid of inflation. They're afraid of the stock market dropping, the bond market going away from us as interest rates rise, bond yields go down. So I think that there's a real rush to real estate. I mean, real estate has always been the greatest wealth building tool in America, and the great estates are made up of real estate. Even the venture capital guys that hit big and go public, they end up investing in real estate, Jeff. So real estate's always been great. It's, Spokane is a little tougher to find something than most markets because it's been a buy and hold market.
Right.
All of us long timers that own real estate, we don't like to sell. And it's tough for a newcomer to find good real estate. They need good brokers, right, Jeff?
They need good brokers.
Yeah. So that's probably enough on the investment market.
Okay, let's go to the industrial market.
Yeah.
Our industrial market is hot and solid. And just a little history. We had a pretty sleepy industrial market for many years, and then back in 2012, Washington voters approved I-502 and legalized marijuana, weed, and the weed growers came into our market and absorbed a couple million square feet over about 2 or 3 years, which was amazing, and it took our industrial vacancy rate, which had been around 8 or 9 for a long time, it took it down to a record low in 2017 of 2.16%. Unbelievable. Today, 2020, I think we ended a little over 3%, so it's still a very tight market. And then we've had in the last year, I'm going to call it the Amazon effect.
Amazing.
Amazing. I was just out there this morning for working on another project, but 2,600,000 square feet great jobs, 1,500 plus jobs. And that kind of jump-started a number of things in the industrial market. We've had consultants come into Spokane, GSI, other organizations have brought consultants in here, and over the years they've said, if you want to compete, you've got to have large spec industrial buildings. We haven't had those, but now we do. There are a number of developers, like right east of Amazon, Douglas, Legacy Park, with 2 buildings totaling 176,000 feet that are spec. We've got SKRERC Business Park out on Barker Road, 150,000 square feet. LB Stone Properties has done a great job of putting up spec buildings at Playfair. Levitt out on McFarland Road, 187,000 square feet.
And he got Amazon.
Yeah, yeah. You put it up, you build it, and they will come.
Absolutely. Wow.
So new rents have gone up, and a lot of these, obviously the Amazon buildings are 100% owner occupied. So we will have a little bit of vacancy here going forward as these new buildings have come on the market. New construction rents are up around 75 cents or pushing some bigger numbers, and existing buildings rents are still down in the 40 to 60 cent range. Cap rates for industrial buildings are a little lower than office buildings, 6.5, 7. And I think last year the average industrial sale price, the average was $53 a foot. But again, we have kind of soup to nuts. New buildings, smaller buildings on the up to $100, and then there were some older buildings, like one of our brokers, James Black, sold the Northwest Bedding, former Northwest Bedding building out on
to URM.
To URM for $26 a foot, which was a great buy for a 139,000 square foot building. One of our brokers sold a building to Auto Nation out in the valley for about $100 a foot. So quite a variety of price ranges. But what we are missing still is the small incubator buildings, bays of a couple thousand square feet. And it's really hard to find, a 10,000 square foot bay in our market.
We represented that developer out on Fancher, and we filled it right up for him.
We did.
Out there, small bays.
Yes.
The industrial market's just been kind of the national darling. The banks love industrial now.
Yep.
Everybody loves industrial.
Yep.
So
now we've got the spec buildings. We're in a position, and actually there are some major national tenants now looking in our market, both Spokane and Post Falls and Coeur d'Alene. And I think we're going to have a solid, very solid industrial market going forward. So good outlook for the industrial market.
Awesome, Jeff. Well, thank you very much, everyone. We appreciate this opportunity. I know we ran over in time. I hope you listened to all of it. Thank you.
Thank you.